Bhuvnesh Singh, Managing Director and Head of India Research at Barclays, joins in as our market master today. Good morning, Bhuvnesh. Thank you very much for joining us. Well, first up, a slightly medium-term and a longer-term view on the markets. Do you think that 7,800, 7,900 are priced in all the near-term gains? Or do you think even in the current and the next quarter, this market could very easily lunge forward towards 8,000?
Good morning. I think the market over a 2 to 3 year perspective looks very strong. So medium and long term in the market, driven by the policy exchange by the government, driven by the low utilization of the corporate, should be very strong. Next 3 to 6 months, it depends on the near-term earnings season. The earnings season so far has been very well. We have seen some earnings upgrade coming over the last couple of weeks. If this continues, market even over the next 6 months could be stronger.
Okay. Bhuvnesh, hi, good morning. Thank you for joining in. I was going through your research note, and you have done an assessment of the Modi government's 50-day tenure. What have your key takeaways been, both in terms of not just the announcements that were made, but how it would really impact some of the listed stocks?
You see, the big thing with Modi government is execution. The big thing is not that there has to be headline-grabbing announcements by the government, but only that the current policy is implemented correctly and implemented in a quick, time-bound fashion. And this is where we find that Modi government is taking the right action. A small item in the budget that a lot of things, a lot of approvals will now go through an e-portal. So things like that will improve transparency and will improve execution going forward. In our view, Modi government should focus only on 2 things. One is inflation and second is execution. And in both of these, we give them full marks so far.
Okay, well, let me start with individual stocks and then come to this bigger macro argument that you are making in terms of how you would break up the Modi government execution in terms of stock selection. Let me start with the PSU banks. We've got a couple of announcements from the government in terms of improving the independence of PSU bank autonomy or boards. That was a half a phrase in the budget speech itself. Now we've got this consolidation of IDBI and United Bank doing the rounds. You have a bunch of PSU bank results to speak about. Bhuvnesh, would you like them as a pack? What would be the pick of the pack?
See, if you look at PSU banks, nearly 3/4 of India's credit is driven by the PSU banks. And these are the banks who are driving more of the agri credit, more of the small and medium enterprise credit, and more of the even the large corporate credit. So these banks would be more cyclical compared to the private sector banks. And given that we think that a cycle is in our favor, we would like PSU bank as a pack today. Within that, of course, State Bank of India is the best execution machine over there, and we will continue to like that as the best.
Okay, none of the smaller fellows? I mean, quite a few are jumping up and down today. For one thing, Punjab National Bank, the big boy as well, is up 2%. And then you have the United's, the central bank counter, that bank actually announcing flat GNPLs. None of the smaller banks elicit your interest?
The banks do elicit my interest, and which is what I said. The whole PSU banks as a pack would be a great play on the cycle. Our banking analyst feels that the NPA cycle has already peaked. We agree. And going forward, as the growth cycle comes back in, I think PSU bank as an overall pack would do very well going forward.
All right. Bhuvnesh, this morning itself, there's a fresh coverage on the consumer durable sector that Barclays has initiated. Just take us through what your view is on the sector itself. And, you have recommended stocks like Britannia, Imami, Marico. Now that some of the monsoon fears are behind us, you think one should get back into investing into this sector?
I think consumer staples sector would give you steady returns. Valuations are not cheap for this sector, but earnings are much more stable and much lower risk compared to the rest. But if we take a 3-year view, we want to play the cycle. We want to play higher beta names. So staples would do well, will give us absolute returns most likely. But from a sector perspective, I think we would prefer to be in more cyclical part of the economy.
Okay. Before the sectors, we should have asked you your overall view on the earnings itself. What have you made of the earnings picture? We've got some early bird averages, which Business Standard, I think, has done, and they give a disappointing number. and the second half normally is worse. What's the outlook on the earnings picture so far, and what kind of earnings growth are you all factoring in for FY15 and 16?
If we look at BSE 100, a more broader index compared to a Sensex or a Nifty, then what we find is that earnings picture is rather good over the last 1 month. So last 3 years, every year we have seen significant earnings downgrade. We will start the year expecting 16 to 17% earnings growth. By end of the year, we would be somewhere between 6 to 8. This year, and already we have seen that we are in the month of July, the earnings number are still staying pat at 17%. They were 17% in early July, early April, came down to about 15.5% and have gone back up again over the last 1 month to close to 17%. So from the overall index perspective, I'm seeing more earnings upgrades than downgrades.
Okay. So within sectors, where do you see the maximum potential of earnings upgrades, say in the next couple of quarters or for the fiscal as a whole?
In short term, the consumption-driven sectors could pick up more. So sectors like automobiles, sectors like consumer-oriented banks, these are the couple of places where we can see significant earnings upgrades. And these are also sectors which are more sensitive to movement in economy. So these are the two sectors which could do very well over the next 6 months.
Did I miss you say this? You can share with us an earnings number forecast for the current year and the next?
For the current year, the consensus is around at 17%. Next year, if I remember correctly, is about similar, 16 to 18%.
Okay, and you share this, is it?
Yes.
Okay.
Okay. So what are you advising your clients now in terms of positioning? I mean, for the first part of the year, it was largely, go out there and buy cyclicals. And that has worked well in our favor if you look at stocks like L&T. But that would still be the call for the second half of the year as well?
We are advising clients that the initial part, the initial momentum and multiple expansion is most likely over. So if we are looking at short term, there could be risk to economy, there could be risk to market, and we could see flattish index. However, we are advising clients not to look over the next 3 to 6 months, but focus on a 3-year picture. And on a 3-year picture, we would remain very, very bullish on the markets.
Okay, in that case, give us an idea of what kind of equity earnings a person can make from this juncture. 12 months, 24 months, whatever you're comfortable.
If you look at the earnings growth would be 16 to 18% over the next couple of years. So I would say that market should at least give us that much over the next 2-year basis.
Oh, wow, okay. That's a fair point. You said earlier in your statement that you would give full marks to the Modi government for tackling inflation. So subsequently, what do you expect the Reserve Bank to do? Do you expect interest rates to come in earlier, interest rate cuts to come in earlier than expected? And if yes, what would the timeline look like in your mind?
So we are expecting interest rate cuts to happen over the next 6 months. So the early movement by RBI could be made as early as before end of the year. So we are rather bullish on that. In our view, short-term disappointments because of monsoon being slightly below average would be there, and we could see that the inflation would not follow a straight line down, but could be volatile in near term. But the government is taking the right policy action.
Yeah, I wanted to come back to that theme, and it's good you just as well mentioned it as the last phrase. What exactly is impressing you about this government so far? I mean, there were all hopes of execution because of the record he had as Chief Minister. But, what makes you so positive? Where do you see areas of execution or correct policy making? And therefore, as an investor, what will you concentrate on?
If you look at coal situation in India, now India has one of the highest reserves of coal compared to the annual production in the world. And despite that, our coal power plants are running only at 65% utilization. Now, this is largely poor execution by India, nothing else. If a 200-kilometer rail line is made, we would have about 40% increase in our coal production by Coal India. Now, is the government moving towards that? Evidently, they have approved certain lines which would increase Coal India's production significantly. So these are the small things. None of them make newspaper headlines. None of them are the first page, top column items. But hidden somewhere in the details, we find these are the small things which government is doing, which will lead to much better policy environment, better execution, lower inflation over the next 3-year basis.
Okay. You still have an overweight on some of these names like ONGC, BPCL, etc. We've seen a fair share of disappointment in the oil and gas space, whether it was, lack of action in the budget or whether it was a deferral in, decision to raise gas prices, etc. Would you still be hopeful and hold on to some of these names?
Yes, definitely. They are very cheap, and while there is a deferral in gas price, not much of the gas price hike has been built into their stock price. And again, we'll point out, it's a deferral in gas price. It is not that the government is saying that they will not give a gas price hike. We believe a gas price hike would happen. It is maybe taking a bit longer, but that would definitely help these stocks.
Again, I insist, I think you didn't answer the second part of my question. I take your point on this small incremental implementational zest that the government has shown. So what are the buys therefore? If coal production indeed goes up, are the coal stocks itself what investors should concentrate on? Would it be power stocks? Would it be cement stocks? Where should they look at?
So over a 3-year basis, our first pick would be companies where we have got low asset utilization and asset utilization can go up.
So power.
So stocks like Tata Steel or Hindalco would fit very well over there. Now power stocks also have low utilization, but in power stocks, we first have to ensure that there is a coal availability. And hence Coal India would be a better buy compared to power stocks for us. Within banks, Axis Bank is something which we like a lot.
Okay. What about some of the cement names? I mean, we have, seen that despite weak numbers, the stocks continue to move higher. And this morning, in fact, we have some good quality numbers from the likes of Heidelberg, JK Lakshmi, etc. What would your view be on that pack as a whole?
We are very optimistic about the cement. And especially as the government pushes for infrastructure, there could be a significant increase in cement demand because of infrastructure spend. So amongst bit smaller names, not the lead names like Shree Cement, we would like it a lot. So we would be a buyer there.
Okay, actually you spoke about Tata Steel and Hindalco, but we have a person writing to us from Jamshedpur. Shubha has written to us from Jamshedpur. Incidentally, our money control guys know about your invitation to CNBC TV 18. They can ask 2 questions. She's asking, is this a good time to buy metal stocks? So in general, beyond the 2, you would go to metal stocks?
I think it would be a stock picker market. Okay. The high beta trade which has been there since YTD, where multiples have gone up and everything has moved up, I think that over there the market will take a pause. We would stick to quality. Within the metal stocks, we think Tata Steel and Hindalco are 2 top quality names, and we would be a buyer there.
Okay, finally, one question from my end on the overall market picture. I heard you mention earlier that you expect a 16 to 18% growth for this market. But, we haven't seen any major correction up until now, and every bull market gives you intermittent corrections. If we do see a correction, say in the latter half of the year, what could the extent of the downside look like in your mind?
I don't know. See, when the market went from 1,000 to 6,000 for Nifty, there were a number of times the market corrected 20%. I could have focused on that 20% correction, but then I would have missed a 6 times move. So the question is, where should I focus on? 10%, 20%, or should I focus whether the market can go up rapidly over the next 3 years? My focus would be on upside rather than downside here.
Okay, Bhuvnesh Singh, it was a pleasure speaking with you. Thank you very much for joining us with your perspective on the macros, the micros, as well as what perspective you see or what estimates you have for the market as a whole. Thank you very much indeed for joining us. Always a pleasure.